is under a heat lamp, but there's a lot of interest in what's going on. Matt Hogan's here. He's the editor of IndexUniverse.com, and you're the sponsor of this event. And, of course, Tom Lydon, we know him well. He's ETF Trends advisor. Matt, let me start with you. The important thing down here seems to be the amazing growth of this industry. Tyler read off some statistics there. 50% growth. We're nearly $800 billion in assets, about a tenth of the size of the mutual fund industry, and really challenging them. I guess my worry here is so many new products. Are investors really understanding what they're getting into? Are we growing a little too fast here?
Well, I think there are some real concerns, especially as you move into alternative asset classes. You know, you can take ETFs and buy gold or commodities or the euro or the yen, and there's some real issues there that investors who are used to stocks and bonds may not know about.
Yeah, and gold, for example, gold is taxed as a collectible, the GLD.
Exactly.
A lot of people don't understand that, the tax implications here.
No matter how long you own GLD, you're going to pay 28% taxes when you sell, not 15%, and people don't necessarily get that.
Yeah, and Tom, the education, that's the big topic down here, the education issue. What's going to be happening to tell people about how to trade these? I mean, it's great you could trade platinum and palladium now, and you could trade the yen and the Swiss franc, but who cares if you could trade all that if you don't understand the risks and it blows up in your face?
I think what Matt's saying is ETFs aren't your grandfather's mutual fund. They're new, exciting, there are a lot of choices, but you have to understand there's a bid and ask spread. You have to keep that tight. You have to understand the volume. You have to understand the assets in the ETFs. And there are a lot of information out there for investors, but with these choices, they have to be willing to do their homework.
And do you still, let me get Michelle in on this, because I know Michelle always got some interesting questions.
Well,
hey, Michelle, how you doing?
Your first guest talked about the issues with commodities. Are we getting any closer to solving this issue? If you invest in something like the USO, which in theory gives you the ability to go long oil for a very long time, unless you have a huge move in oil, you can actually lose money even if oil is going up because the contango and the rollover costs. Are we any closer to fixing that?
We're getting there, Michelle. I mean, you have a new ETF called USL that takes a 12-month average of the oil futures market, gets you a lot closer to spot oil. You can't get all the way there, and it's important that investors realize that. But as innovation comes along, we are getting a little closer.
And you're not owning spot oil. That's the key point about there were a lot of misperception. There goes back to that whole issue of education there.
It's a huge issue. You're not owning spot oil. You're not owning spot natural gas. And there are big differences between that and owning the futures.
What's the hot topic here, Tom? What, other than the education issues, rightly the #1 topic, what are we going to be able to do in 2010 with ETFs that we're not able to do right now? How are we going to get more innovation?
Well, I think as we look at this year and we look at the economy, there's probably going to be higher interest rates. What about shorting the treasuries? Or what about the dollar increasing? We've got ETFs that cover those areas. So, again, more choices, but homework is definitely required.
Let's bring in Tyler here. How you doing, Tyler?
I am doing great. I guess one question I would have, and it could be a jump ball, what concerns me is the idea that people may be trading these ETFs and turning them into vehicles where they can do minute-by-minute trading or short them and so forth. And that all comes back to that idea that that many investors may not understand exactly what they're getting.
Tyler, you're absolutely right. You can replicate core major index ETF portfolios and do very well compared to major mutual funds. But it also, with all these choices, it attracts traders as well. So again, if you're inclined to trade, you have to make sure you understand exactly what you're doing.
And what about the big hedge funds, Tom, that are now in there, and some of the private equity firms that are using these ETFs as well? How does the little guy compete against that?
Well, they're all buying the same ETFs or have the ability to buy the same ETFs. But if you understand the volume, you understand the bid and the ask spread, you can compete head-to-head with these hedge funds.
Matt Hogan, Tom Lydon, thanks very much. We're going to have the biggest names in the business here through the next 2 days. State Street, BlackRock, PowerShares, they're all going to be here talking to us. We're the exclusive provider of coverage on the television end of things here. So thank you very much, gentlemen. Tyler, back to you.
Bob, thanks so much.